Hey everyone, welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy. This is the official podcast of Delphi Digital, an independent research boutique providing institutional-grade analysis on the digital asset market. If you love the podcast, add your email on delphidigital.io for our research alerts. We have a groundbreaking report going out next week, and it's better to have it in your inbox versus finding out about it hours later on Twitter. Today I'm thrilled to have on Max Bronstein of the Dharma Protocol. Dharma is the easiest way to borrow and lend crypto assets for anyone who wants to get leverage or an interest on their crypto. Both of these, borrowing and lending, have been extremely hard to do in the past, and Dharma is solving both of these issues. Dharma is a critical piece in the DeFi or decentralized finance ecosystem that's growing on Ethereum, along with MakerDAO, DYDX, and other projects. We cover everything on this episode, ranging from Dharma's waitlist, which has grown to over 1,600 people, to Dharma Lever, which is a stunning new user interface the team has rolled out. With that, here's my conversation with Max. Hey everyone, welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy, and today I'm joined by Max Bronstein of Dharma. Max, how's it going?
Doing well, Tom. Thanks for having me.
Yeah, it's great to have you on. So Max, tell us how you got started in crypto.
Of course. So I really first kind of went down the crypto rabbit hole when, a friend of mine who I was living with in college kind of, brought up the notion of Bitcoin, said you should really look into it. This was kind of early 2015. We both started watching these videos. There was one in particular that Chamath kind of posted, really talking about the ramifications of Bitcoin. And I was initially struck just by this notion of a digital manifestation of value. That really struck me as something, that would, kind of remain in the world for a long time, something that made sense given globalization and digitization, and, got really enamored by the concept. So from there, we actually created the UCLA Bitcoin Club, held a couple of meetings kind of alongside the LA Bitcoin meetup, which at the time for our first meetup, we actually got 3 people in total to attend, which was a big success for us. From there, got an internship at a company called Gem out in Venice. At the time, they were working on kind of enterprise blockchain applications. After that, worked in the venture arm of BTC Inc., which is a big media company in the space. And actually, as of October of 2018, joined Dharma, and that's where I'm at today.
That's super interesting. So tell us about the Dharma Protocol. Give us the high-level take on it.
Yeah, of course. So Dharma Protocol, is a open source platform on which developers can build, arbitrarily complex lending businesses. The way you can think of it is almost similar in the way that ZRX is kind of this canonical settlement layer for, theoretically all asset exchange. Dharma is that, but for, tokenized debt agreements. So, borrowers and lenders can sort of sign these debt orders, and then they can be matched peer-to-peer, and the terms can be, as complex as both counterparties want them to be.
That's super interesting. So is it solely focused on loans and lending, or where are the lines drawn on Dharma?
Yeah, so it is focused on like lending functionality. So if you could think of almost like Stripe as, any business could integrate the ability to accept payments within a few lines of code. With the kind of Dharma smart contracts, any dApp developer or even just existing web business can integrate, lending functionality. So an easy example to think, let's say there was a company that wanted to do an Affirm style checkout in which buyers, could like finance their purchases. You could theoretically, on the back end, use Dharma Protocol to accept cryptocurrency payments in form of loans.
So you guys are the back end, right? You're not building the front-facing applications per se?
So there has been a bit of a change. So Dharma Protocol, as it stands, is a set of smart contracts, developer libraries, different frameworks. I think they are more akin to a back end in which they're kind of plug and play architecture that you can integrate into your application. More recently, though, we've actually unveiled a new product called Dharma Lever, which is this sort of like front-facing user product that's built on top of Dharma Protocol. So it's interesting in that, we're kind of like vertically integrated in which we built and maintain, the open source software. And then, we're trying to be as close to the user as possible, through a Dharma Lever. So it's almost like the relationship between Veil and Augur is the relationship between Dharma Lever and Dharma Protocol.
Got it. That makes sense. So just for our listeners, just to paint this mental picture in their head, how would you compare Dharma to, say, ZRX? Like ZRX is building infrastructure for decentralized exchanges that are built on top called relayers. And I know that you now have the change here with Dharma Lever a bit, but you guys are still basically the protocol and the infrastructure that's underlying these applications, right?
A little bit, yeah. So ZRX and Dharma, the one kind of core feature that they share is this notion of off-chain off-chain relay, on-chain settlement, in which you can kind of sign these cryptographic orders, and they can sort of be hosted off-chain. To date, we've had a few relayers built on top of Dharma Protocol, but not like too many. And so 0x, right? It's pretty much basic kind of exchange orders. For Dharma, it's both signed, orders from debtors and creditors, pretty much saying like, I want to borrow this asset at these terms. And then on the same side, like a creditor says, I'm willing to lend out these assets on these terms. And if they have kind of qualifying orders, they would be matched off chain by a relayer. 0x isn't as focused as much on being as close to the user, right? They relegate that to their relayers. The relayers are the ones that kind of build the relationship with the user and are building kind of user-facing products. Where for us, while we do have a couple of relayers that are doing it, we're also kind of pushing the charge ourselves with Dharma Lever. So we both have the protocol layer and then the application layer.
Interesting. That makes sense. So I guess with Dharma Lever, what's the takeaway? Like, people are going online on a website to basically borrow and lend crypto, or what are they doing online exactly for this? Like, what's the process?
Right. Yeah. So Dharma Lever, the way to think about it is that it's a very easy to use trustless margin lending tool. When you break that down, it really comes down to a few core use cases. On the borrowing side, people want to access margin to either go long, add exposure to a position. They want to go short to hedge risk, or to take a bet that an asset will depreciate. And a really big camp as well is actually working capital. So miners or just any company or project that sits on a lot of crypto and that they don't necessarily want to sell them and kind of incur a taxable event, they could lend against them to pay for kind of short-term capital expenses. A lot of projects do it just to pay rent and kind of salary. And interestingly enough, I actually do believe, I think Cumberland they alluded to the fact that they were going to be announcing an OTC lending desk because, exchange volumes have really fallen flat as, the retail market has subsided a bit. And, these exchanges do sit on a lot of crypto assets. And so instead of them having to kind of sell that on the open market, they could lend against them, if they think, all right, we're kind of nearing a bottom here. And then lastly, obviously on the lender side, we do want to kind of aggregate capital and we want to allow anyone, to lend out their assets and earn interest, right? So we're essentially creating this like two-sided market in which there are, a set of institutions who want to borrow cryptocurrencies. And then there's this whole kind of pool of capital, that wants to lend it out. And so we really want to kind of connect those two parties and unify the use case.
So I'm on dharmalever.com, kind of, the main landing page for Lever. And there's obviously the two sides, the get leverage side where you could borrow crypto, and then the lender side where you could earn interest on your crypto. So I guess just starting with the leverage side of things, where users could borrow crypto from a network of lenders. I mean, the interest rate is, 0.1%. The term's 28 days, and the limit is 250 ETH. It's Ethereum's cryptocurrency. I mean, just starting with the term, I mean, isn't 28 days kind of short? I mean, wouldn't people want to borrow for like years here?
Yeah. So I wouldn't over-index too much on what's on the website currently. Where we're at specifically in Dharma Lever right now is we're very much in a early alpha phase. It is closed. We do have a wait list. And right now we are actually sort of playing around with the terms to try and stress test the system and to really kind of understand what use cases are dominant. So in terms of what's presented on the website right now, I am fairly confident that 10 basis point interest rate will not be there for long. As more people enter the system and as we continue to allow it to become a free market, which is what it's designed to be, my thought is that interest rate will sort of go up, again, just benchmarking off of other lending protocols. So I would expect those rates to kind of go up. The borrow limit, again, is also arbitrary at the moment. We are just stress testing the system and we don't want to overflow it with like millions and millions right now, just because we want to make sure everything is in order while we're in this closed alpha. And on the term front, I totally agree. I think people definitely want to take out longer duration loans. But again, right, so we are actively kind of gathering feedback, working with alpha partners to really figure out what are the most desirable terms. Right now it's at 28 days, right? Because if we do want to have a sort of a tight feedback loop with our users, we can't have it be like 3 months, right? Because we can't check in after 3 months, be like, hey, like, how did you like this, right? We have to kind of say, every week or 2 weeks, like, hey, what did you think of this feature? What would you like to change about that? And keeping it at a little shorter term will just help us iterate faster right now.
That's awesome. Yeah, I mean, I saw the lens side is a tenth of a percent too on the interest rate with that limit. And just to connect the dots here, I mean, these, and I haven't really dig too deep into your technical paper, so I'm kind of going on a whim here, but the leverage side and the borrow side, these are linked between users and crypto, or is this, how exactly does that work?
Sure. Yeah. So like Dharma Lever is a peer-to-peer market, right? So theoretically, either a borrower and a lender, they can kind of, they'd be using a front end to submit an order, but on the back end, right, they're signing a cryptographic order, saying that I want to either borrow or lend this asset, and I'm willing to sort of accept these terms. So once they're qualifying terms, the borrower and the lender are matched, right? So our interface will abstract a lot of that, and we will either like suggest terms relative to the liquidity in the open market, and we will definitely try to like match orders. So if you're a borrower coming into the system, we will present you with existing lend offers just so you can kind of get instant liquidity.
Oh, got it. Okay, so two parties can agree on a different rate, a different term, and a different limit between themselves, and you guys, like the new front end of Dharma Lever after this beta or alpha phase, will showcase that whole marketplace?
Correct. So the user will initially be prompted by existing liquidity on the books, just so they can kind of get liquidity right away. If, let's say, for some reason either side thinks the counterparty is more desperate than Dharma Lever is showing, they will be able to just post an offer and let it sit on the book, and then wait for a qualifying counterparty to come take it. So if we think there are a ton of lenders, right, and there aren't a lot of borrowers, and the borrower's like, all right, I think I can get this loan for cheaper, and I'm willing to wait, they can post an order that's like a whole 50 basis points below what the book is showing, and then that'll sit on the book, and then once if it's taken, they'd be notified. So yeah.
Got it. That's interesting. So just looking at I know the sample interest rate, I know it's going to change and the limits are going to change, but if I'm on Ethereum, saying a few years from now, and I have Ether, and I could decide to stake it for hopefully a few percent a year, or lend it out at a low interest rate, like why would I want to use Dharma over, say, staking? Like, is this like a different user that you're targeting, or a different party?
It's a little bit of a different party. And I think we can get into these like proof of stake markets and why I think kind of lending markets will play into that. But again, it really depends on the yield, and I would imagine that the interest rates will fluctuate relative, right, to market dynamics. So if for some reason the price, again, in any volatile market, right, people will want to get leverage either to go long or go short. And in times of volatility, the borrow rate will probably increase given increase in demand, right? So at that point, people sitting on ETH are able to either passively have it in proof of stake and be earning a yield, or they can play the market and access a higher yield given that there's more demand to borrow their assets. Similarly, this is non-custodial, right? So they are still taking the same kind of smart contract based risk that they are when they are, or using their assets in proof of stake. So that's kind of how I would imagine it. And then as well, you can think of it too, where people will be able to leverage lending markets to participate in proof of stake without necessarily taking on like balance sheet risk, right? So if, let's say, the proof of stake yield is like 4.5%, and they're able to borrow it for 2%, there might be some sort of arbitrage opportunity in which like they're not necessarily holding that ether, they're purely extracting that the spread between the proof of stake yield and the borrow rate. I'm not entirely sure how it's going to play out. It's tough to predict the rates, but I do think there'll be a really interesting interplay between proof of stake and lending protocols.
Yeah. So Max, that's super interesting. I'm working on a generalized mining post for Delphi Digital now, so more of a personal question, but I think it was worth sharing publicly. And just for users that are unaware of Dharma Lever, I mean, I was following you guys on Twitter. I think your wait list was up to like 1,000 people. So I guess the interest is really high.
Yeah, so we actually were joking earlier today that our wait list, it's about to breach ETH all-time highs. So that's kind of our that's sort of our internal goal at the moment. But yeah, I mean, in terms of the wait list and kind of what we're going for really with this product, right, is we really want to kind of hammer the point home that it's great that we have like these DeFi products and in general new things are being built, right? But we do need a user, centered design, and we need to make it so users that are accessing these tools, right, like they're doing so in a way that fits their previous habits, right? Using DeFi should really be the same as using any fintech product that you're accustomed to now. That's how we really think we're going to get to adoption, and then that's kind of what we want to pioneer, right? So Dharma Lever is like, it is very simple to use, and it's going to look and feel a lot like today's best web products. You log on, you decide your terms, you send money to our smart contracts, and the work is sort of abstracted for you. And one of the other cool things that we're doing is that we're not like limiting users to Web3. You're more than able to use MetaMask, but especially because we're targeting other like kind of more institutional players, right? Trezors, ledgers, really any wallet you have custody of, you can use. And we actually are working to support exchange wallets too, which we think will be a huge boom.
That's super interesting. So is there any way for you to gauge? I know it's early in the alpha or the beta. I apologize, I forgot which one you said it's at. But is there any way to gauge what users are more interested in? Is it the leverage side or is it the lending side? I'm assuming your early users probably want to borrow crypto to kind of lever up their positions because we're not in that mature of a market yet, where we have, say, asset managers trying to lend out large positions or something like that. But interested in any color there.
Right. Yeah. So I think for the crypto market in general, right, there is this kind of notion of a lot of people look at Bitcoin and Ether as like these long-term investments, right? We have the big HODL meme. So to date, there definitely are a lot of lenders. But as the market is maturing, there are increasingly more borrowers that want to hedge their positions. And this is kind of why, at least I think Dharma Lever is a really important piece of infrastructure is, we can get into other lending protocols, but Dharma Lever is very well suited for taking kind of large volume short positions, which if you ask me is like that's just a core tenet of any like well functioning market, right? Institutions will not enter a market in which they can't hedge their positions. This kind of notion of just buy and hold, like that isn't really going to play in the crypto markets anymore, and which I think the whole community should embrace that because we do want institutional players coming in. We do want less volatility. We do want a well-functioning market. And the ability to short sell just allows skeptics, right, to enter the market. And so we get better price discovery, we get better liquidity, and all that stuff. So that's kind of where I'm seeing a big uptick in borrow demand. And then as well on the working capital side, right, there's a lot of businesses that just hold a lot of crypto and they don't want to sell it and take on a tax burden.
Makes a lot of sense. So I know that there's a lot to come and a lot to change and a lot to add to the platform, but do you guys have any insight on what assets you're going to allow on the platform? I know Ethereum and USDC are the only ones listed right now.
Yeah, great question. So, we've definitely heard the community loud and clear on DAI. We definitely internally want to add DAI, and I'm sort of working on that. And then we're also interested in adding Wrap Bitcoin. We are a DAO member there. We're kind of waiting a little bit to see some more liquidity happen. And then, we are working actively with like alpha partners. And if there is demand, right, we can add liquidity ourselves. In terms of other assets, still an open question. For us, it's really going to come down to two things. One, right, user demand. If there is an asset that people really want to borrow and lend, we will look into it. And then, it has to sort of meet internal criteria. I feel like the industry probably would converge on the same set of like quality assets, if you will. But for now, Wrap Bitcoin and DAI are sort of the two that we're eyeing to add next.
Makes sense. So, I mean, what are the other ways that, like, who are your competitors in leverage here? Would it be like BitMEX or would it be like MakerDAO? I'm just trying to wonder how users in crypto get leverage today outside of Dharma.
Yeah, that's a great question. So I wouldn't necessarily say competitors, but so I would break it up into two camps, right? So you have you have DeFi projects and protocols that offer some type of like margin lending exposure. And, those are right, Compound, DYDX, and Maker. And then, I guess we'll coin the term now, right? So you do have the CeFi avenues like BitMEX and Bitfinex. Just starting quickly with the BitMEX and Bitfinex, both of those platforms like see a ton of volume. We think that there is an emerging kind of demand for non-custodial platforms, and then BitMEX and Bitfinex in general have had other issues, rumors of them trading against customers, all of the Tether drama is there. So while those avenues have the most volume, and we definitely don't think people are going to leave them en masse, we do think there is a large subset that is looking for alternatives. And I think you've seen that in the kind of the growth of DeFi, right? You see the ETH block and DeFi chart, has kind of hit hockey stick growth. And so in terms of the DeFi camp, right? So you have Compound, which provides this algorithmic money market platform. With Compound, right? So they use a variable interest rate model in which the interest rate fluctuates relative to supply and demand within each market. And what we've kind of seen now is that everyone wants to lend their assets, but no one really wants to borrow, right? So the lending rates are very, very low to the point where it doesn't even make sense to send your assets to the contract given transaction fees and just like technical risk. And if you wanted to take out a large volume order, a borrow, you would send the interest rate kind of skyrocketing given that there's not that much liquidity in the pool for that. So Compound really lends itself to short-term borrowing use cases. I think a lot of dApps will probably plug into it. And then, as we'll start seeing more like custodial apps use Compound for, sweep accounts in which they can kind of earn interest on their existing float. And then DYDX is another one. Awesome platform. The biggest benefit is that it actually uses smart contracts to execute trade positions for you. We kind of see ourselves as a little different in that you can't really move the assets off of DYDX, right? You are locked into a position on their trading platform. Versus Dharma Lever, it's much more general, and you're able to, once you have the assets in your wallet, you can move them around and do whatever you want, whether that be enter a position, pay off, short-term debt, anything like that. Maker, I would say, is definitely the most comparable in that, you open up a CDP from a smart contract and you can draw debt. The biggest difference with Maker, right, is with Maker, you can't short an asset, right? You can only go long because you're borrowing DAI, which is fiat denominated. So you put up Ether, you draw down fiat debt, and then, you're able to pay off working capital, or, most people, it looks like at this point, are using it to go long. So Maker actually recently published like a DAI in numbers report in which they sort of showed usage of DAI over the last year since they launched, and it was almost near 80% of all DAI transactions went to either Oasis DEX, HitBTC, Compound, or a decentralized exchange, essentially showing that people were kind of going long assets and adding leverage to the system.
That's a great overview of the ecosystem. You covered all the top players, which is great, Max. And MakerDAO, I definitely think it's a lot of press. It's one of my favorite projects. Disclosure, I own some Maker tokens. Their growth has just been incredible. I think they play a crucial piece in the whole DeFi movement, and you covered the whole ecosystem just now. But, what is, and this is probably a question I should have asked you earlier, but what is the whole point of DeFi for those who are new to it? Like, is this about, unbanking the bank, or what exactly does this mean for consumers?
Yeah. So DeFi, I mean, there's a lot of ways in which this could go. I really see DeFi as kind of this continuation of this sort of like fintech renaissance that I think we've had since 2008, right? Once that debacle happened, it kind of broke the gates open, and entrepreneurs and people realized that people are looking for alternatives, right? So we saw Wealthfront, we saw Robinhood, we saw Stash, Acorns, all these companies emerge out of that in terms of a kind of digitizing financial services and making them more user-friendly, cutting costs, like increasing competition. So I really see DeFi as a continuation of that, right? We can use Ethereum as, and Bitcoin as well as just this, much more efficient settlement layer. And, we can actually cut costs for users, and we can also add benefits like, owning your assets and actually taking custody of that. So to me, I think the end goal of DeFi or open finance or what have you is, push costs down, increase competition, give users more optionality, which again, kind of moves value back to the user and sort of disintermediates the financial landscape. Yeah, that's kind of my thought there.
That's a great way to look at it. I always thought of Bitcoin like giving everybody their own bank account with a wallet. Now I'm thinking of DeFi as, we're offering the rest of the bank services to everybody. Do you think that, these DeFi pieces, whether it be you guys or Compound or MakerDAO, do you guys believe that this will, replace traditional Wall Street, or do you think you're going to coexist? I know I ask this question a lot, but I'm big on competition.
Yeah, so I do think it would be a little foolish to say right now, right, that DeFi is going to eat Wall Street. One of those industries has been around for a considerable amount of time and has a ton of infrastructure built out. But what I do think is going to happen is we are going to see a rapid rise in this sort of parallel financial ecosystem, this new economy, pretty much, right? To me, crypto is very much an emerging market. I think the growth rate of crypto will be a lot, will be multiples faster than the growth of Wall Street was, just given the compounding effect of technology. It's hard to kind of say when it would catch up. But again, the fact that it's internet native, the fact that anyone can access it, and the fact that it's global, I think just competition is going to rise really, really quickly. And I don't really think we've seen yet. Maker is kind of the start of this breakout, platform, but I don't really think we've seen anything yet. So I think it's going to take some time for us to really be battling Wall Street. But I think you're sort of seeing, and you're kind of seeing an evolution of, like, let's say Ethereum, right? We had this, distributed investment bank that was the ICO boom, right? We had all these underwriters come in, underwriting projects, selling them on the market. And now we're kind of seeing a little more of a mature market, and it's really like lending based, right? So we're creating credit markets.
Honest and realistic answer, Max. I love it. Yeah. And, another question for you, just on Dharma Lever and going back to your infrastructure. I mean, what are the key benefits to use Dharma over other, traditional shops, or what does it allow? I'm thinking that it allows people that didn't have access to loans to get them, or, lower the interest rates. What are like the top 2 or top 3 driving factors you believe to drive people to use Lever?
Yeah, so I actually think you just nailed them on the head, right? So on the more traditional side, the more institutional side, when you're using an OTC desk, a lot of times, right, you submit an order, and first things off, your settlement time can often be a couple of days, right? So with Dharma Lever, assuming there's liquidity in the pool, your settlement time is, I think, like sub 2 minutes, which is like honestly incredible. If anyone's ever taken a loan out, it just takes days, or it can take even longer. With Dharma Lever, like, it really happens in almost instantly. So that is kind of like a magical part of Ethereum right there. Similarly, for those players, right, we do think interest rates will go down. Just broadly speaking, when you can increase access to a market and increase the availability of liquidity, right, rates should go down if more people are able to participate. And then similarly to like lending desks, when you are transacting with them, they are always going to charge a much higher interest rate because you're essentially transacting through a single order book. And they kind of control that order book. And, let's say they have a friendly relationship with you, they can offer you a lower rate. But if you're a new player, they can raise the rate, right? So we are kind of like thinking of it as almost this, can't be evil type of infrastructure in which the playing field is equal for everyone.
Makes a lot of sense. So do you envision the consumers of tomorrow, the people that are, the kids that are 10, 15 now, 5 or 10 years from now when they grow up, do you see them walking into a bank to get a loan, or do you see them using Lever to get a loan for, something like college, a house, a car? Where do you see the next wave of consumers getting their loans and leverage from?
Yeah, so I think my answer is going to be a little bit biased here. I would posit that they would use a DeFi platform. Again, if they're in this ecosystem, I think it's just a much easier user experience. It's something they're used to. And you do bring up a good point in that. It's something we are trying to do at Dharma, right? Is we are trying to bridge these DeFi products into the traditional world. We don't really want to be marketing them as crypto products, right? This is a lending tool. You can use it for any type of financing, but on the back end, right, you are transacting in cryptocurrency. But if we look at things also like USDC, right, that's essentially a digital dollar. It might not be long where Venmo or PayPal is using USDC, and finance just kind of becomes interoperable. So you could take out a loan from Lever, put it into PayPal or Venmo or whatever application, and then pay off your friends, your bills, all that type of stuff. So that's kind of where I see the end game of DeFi.
That's great. And, another question for you here is, you guys on Lever, the UX and the UI is just awesome. And I think that really sets you guys apart in crypto, because historically there's been so much focus on the infrastructure that, there hasn't been that much focus on the user experience. What's the feedback you guys are getting on this? Because I think it's really, really great.
Yeah. So the UX has definitely been a focus for us. That's kind of how we wanted to really communicate the value of Lever. And I mean, it's really resonated. The feedback we've got from the community, honestly, has been pretty deafening at this point. Like, the waitlist shows it. People want usable crypto products. And so we really do want to hammer this home, right? We actually, we want to create some of the design patterns that will be reused in future DeFi products, right? So if we can set the standards now, it's better off for the entire community kind of going down the line. So UX will definitely be a big focus for us. If you are an alpha partner, like, always feel free to shoot us feedback, let us know a feature request. That's kind of how we want to build this thing.
Got it. That makes sense. So when does Dharma Lever, do you think, or is there a date, go from alpha or beta to fully live?
Yeah, can't give away all our secrets. No, I mean, we'll be testing it, a little more robustly over the next couple of months. I would say, around Q2 is when I'd expect kind of a more public availability.
That makes sense. So, I mean, even though the date is a little the date's fluctuating a bit on the official launch date, but how would you view Dharma as extremely successful? Like, what metric do you think to look at? Is it users that onboard? Is it some nominal value of lending? What's the value you would put, like, say, a year or 2 years from now, that you would come back and say Dharma was a wild success?
Yeah, I think as a financial sort of service, I would say that our core KPI is really, lending volume. So we'll look at that, and we want to hit X amount of loan originations. But then I think what's even more interesting, right, is we could benchmark those values to something you would do through Genesis or a BitMEX, right? And we can actually see the cost savings, that we gave to users relative to, like, the interest they actually paid, right? So I think a more interesting KPI for us would be, like, how much money did we save our customers? How much better off were our customers given the fact that they were using, more transparent and global infrastructure? So that's kind of how we're thinking about it.
That's great. And just going, let's switch over to the dynamics of Dharma a bit. How do you guys decide, like, are you guys saying, from the get-go, hey guys, we're centralized, we're going to decide what assets are on here and what, say the collateralization ratios are? Or, I mean, that might be more for the marketplace, but are you guys saying, like, from the get-go that, hey, we're a centralized entity and we don't plan to decentralize? And I don't have an issue with that. I'm just wondering if that's the focus.
Yeah. So I do think our end-to-end goal is to definitely decentralize ourselves. I think where we might take a different approach to maybe the broader community is we think that is a ways away, and we really want to stay focused on the present and not get too caught up in the future. And so for us, right, our kind of initial idea is we will build, multiple sets of products on top of Dharma Protocol that will make, this kind of global pool of credit liquidity larger. We just think it's going to take a lot of time. And, we think for the foreseeable future, right, we'll be focused on Lever. And then it might be the next use case that lends itself well to sort of decentralized lending. Haven't put too much thought into how we would decentralize ourselves. Again, definitely on the roadmap. We just think we're pretty far away. And to answer the question of, like, adding assets, right now we are going to do it in a centralized manner. But, we think, like, the way Compound does it is really interesting, right? You can do basic off-chain voting stuff to help decide that. It's essentially just a more efficient way of gathering community feedback. So actively looking into it, definitely something we want to integrate.
Max, it's great to have you on because it's refreshing, because your goals sound so realistic. A lot of people I hear on other podcasts say, we're going to solve the world tomorrow.
we at Dharma, we do try to take a more realistic approach to the space. Tons of innovation, but we have to be metered in what's possible today.
Yeah, that makes sense. And you just mentioned in your last answer that you guys are going to focus on building products. And I guess this will be a good problem to have in the future. But, if you're trying to get companies and projects to build using your infrastructure, aren't you then competing against, potential people that build on Dharma? Or is it not so much?
Yeah, that's a good question. So something I guess I didn't really mention in the beginning is, a core piece of Dharma is this notion of, this global pool of credit liquidity. So similar to ZRX, right, in which they want this massive global pool of liquidity for basic asset exchange, right, that anyone could access. That is what Dharma is trying to do for debt. So all these applications that are really built on Dharma smart contracts are all sending liquidity, to this main pool, right? So if you have Dharma Lever and then you had, a competing Dharma Lever, they would be drawing liquidity from the same area. So they actually complement each other. In the same way that all these relayers, are supposed to complement each other, right now there's kind of a poor incentive to share liquidity. But that really is kind of the end goal that we're striving for, right? So the more use cases that are built on our contracts and draw from the same liquidity pool, the better for everyone.
Makes sense. So just going to blockchain world and crypto now, I mean, where is Dharma built on? Are you guys built on Ethereum? Do you store state on Ethereum? I'm kind of new to the story, but I'm kind of enjoying it because I'm getting all the base questions out of you.
Yeah. So built on Ethereum, store state on Ethereum. So only support Ethereum-based assets right now. Totally in Ethereum native app or protocol.
Got it. And did the team go through a thought process of, maybe we should build this on Tezos or EOS, or was it always Ethereum from day one?
Yeah, always Ethereum from day one. I mean, if you kind of think, right, like you want asset interoperability, there are some like middleware protocols being built to help bridge this gap. But I mean, everything right now is built on Ethereum, and it doesn't really make sense to move off that.
Got it. That makes a lot of sense. So, I mean, are you guys limited today by Ethereum's throughput at all? Or is I'm just wondering what happens on chain with regard to Dharma's protocol?
Yeah, so this is actually an interesting question. So Frank at the Block kind of asked why won't decentralized lending fall the same way as DEXs have, right? In terms of volume. And my answer to that was, if you look at decentralized exchanges, the status quo that they're battling, right? The place where they have to actually provide more value than centralized exchanges is their users have like extremely high throughput and really low cost, right? So the transaction cost of moving to decentralized infrastructure is quite high. For lending, on the other hand, if you're a big player using OTC desk, you're taking on day-long settlement times and super high interest rates. So with a decentralized option, you're actually cutting down settlement to minutes, and you're dropping the interest rate, by an order of magnitude, right? So the transaction costs are really low, and there's actually a huge incentive to use something like Dharma over something like a Genesis.
Got it. That makes sense. So I guess going to the marketplace, though, where this all happens, like where users are interacting with your protocol, how hard do you think it's going to be, or how fast could somebody go into one loan and out of another? I'm just wondering, like, if interest rates on the protocol or the marketplace move really quickly, I'm wondering if some users or lenders are going to get burned, or if it's hopefully would be somewhat of a liquid marketplace here.
Yeah, the goal is definitely to have a liquid market. I mean, so let's say if you're a borrower, right, and you place collateral, you have the principal, in minutes. You're able to pay off the loan at any point in the duration. So if you want like a better rate, right, or if the interest rates drop precipitously, you can pay back the debt, with a little bit of interest, whatever that was there, and then take out, another loan. So we do think people will like get optionality, and you will be able to move in and out of positions fairly quickly, right? Because it's really just a simple transfer to a contract.
That makes sense. So do you think people are going to be able to borrow like non-cryptocurrency assets like NFTs and stuff like that, or in security tokens, or is that not playing to Dharma? I'm just wondering like where the overlap would be on the marketplace beyond, say, Ethereum and USDC.
Yeah, so within Dharma Lever, it'll be strictly these kind of well-known ERC20 assets, ones that are liquid. But the core protocol itself, right? So there are both ERC20 and ERC721 collateralizer contracts. So, a developer could theoretically build their own platform which uses an NFT as collateral. I was actually thinking at ETH Denver, a really cool, product to build, which is tractable today, would be to create a platform in which, decentralized users who hold land can take out, a home equity line of credit against their land, right? They would put the land up as collateral as a 721, and then they could draw, DAI or something against their land, relative to some LTV value. But tons of different ways to use Dharma Protocol, and that's just one of them.
That's awesome. So I want to get into why you guys decided not to use a token, or if that might be on the horizon. I'm sure that was not in easy conversation with the team? How did that go?
Yeah, so I wasn't there at the time when this was discussed. Brendan Forrester, one of the co-founders, actually has a great post about this on the blog that I would encourage everyone to check out. Underlying theme is that it just introduces too much, regulatory overhead, and then it introduces a community that's not really interested in the technology, but is much more profit-driven, and that's just a fundamental misalignment of incentives for the people that you want supporting your project. So also why we're building out Dharma Lever is we just don't really see a logical reason to have a token as a form of value capture.
Got it. I mean, just thinking out loud here, I mean, let's say Dharma and MakerDAO have like huge interplay between themselves, and Dharma leads to more demand for DAI, which makes hopefully or somehow makes Maker more valuable. Do you think people are going to start potentially buying Maker because of Dharma's success? I'm just kind of wondering at the interplay between these protocols.
I can't really speculate on whether people are going to buy MKR. My thought is people would probably buy MKR only if the Maker platform is doing better. But I mean, these markets are pretty irrational, right? And everyone's looking for a little bit of hopium.
Oh yeah, no, they're totally inefficient, which is supposed to give us good opportunities, but it seems like it's just so illogical most of the time.
Right, it's hard to plan these things out.
Yeah, I got that. So let's switch over to potential black swan events, risks. I mean, what's the biggest pushback do you think you're getting from Dharma? Like, what are the bears saying? What do you think you spend your most time kind of dispelling here?
Yeah, I mean, I would say I don't know about Dharma specifically. If there's anything unique, unique risks that we introduce. Obviously, it is a leverage platform. I think more broadly with DeFi, there's a lot of concern with, if we're locking up so much ether as collateral in these contracts, and we add leverage to the system, what happens on the way down, right? Like Maker has stood the test of time on the way down as more people are locking up their money to either, again, to pretty much get leverage. But sort of what happens and they're not doing too much buying, but what happens on the way up when people are just locking it up, getting more leverage, and then now they're buying more feverishly. We haven't really seen what that's going to create. And there's some interesting discussions around people buying MKR, and that you see a lot of chatter online. The Uniswap pool is growing, but MKR is very much almost like a tokenized credit default swap, right? MKR holders are they're the last source of capitalization for the system, right? They are of last resort, if you will. And I don't really think that people buying MKR are necessarily understand how insurance contracts work, right? So you're being paid a premium for essentially being the seller of insurance. You're providing that insurance. If this for some reason goes the opposite way, I just don't think people really conceptualize exactly how insurance payouts work. And that if it does fall the other way, you will be wiped out completely. And that's
a really differentiated way to look at it. I really like that. And, I kind of resonate with your thoughts there, because when I built out my Maker valuation model, I included 2 black swan events where Maker, the token, was auto printed to be sold to buy back DAI or to stabilize it through some of those mechanics. I'm thinking off the top of my head about the model, but yeah, you're right. I don't think people really keep that in mind, that could happen.
Right. And I think I did see like a DCF posted about MKR. And to me, I just think a lot of the excitement is priced in and potentially overpriced in. Yeah, again, but that's not to really take away from the platform. Like the growth of Maker has been outstanding. I think it's definitely the most interesting thing on Ethereum right now. And the only thing really DeFi is like one of the true bull cases for Ethereum, right? We're actually using Ether as collateral and we're locking it up and supply is being taken out. But again, people have to be cognizant of the fact that I'm not seeing that there's demand for a stable coin necessarily, right? There's demand for cheap leverage, right? The rates have been under 2.5% APR, which is lower than the Fed funds rate, right? So accessing credit in crypto right now is very, very easy. And, it's kind of the antithesis of the whole ethos, right? Is we're supposed to, more sound money. I do think debt markets are really important and you can never really take them away. I think they're a vital part, of an economy, but I think there is sort of this mismatch in which demand for DAI is not a function of demand for the stable coin. It's demand for really, really cheap leverage. And I think, the downstream effects of that could be a lot larger than people realize.
Got it. So just talking about the up and down moves that you talked about before, it's kind of, I'm thinking about this in my head, it's kind of like a mismatch a bit, because you guys are making crypto more efficient because people could go short, but we're locking up a lot of crypto, which makes the underlying crypto less liquid, which could make it, very volatile. I'm just kind of wondering which is going to pan out here. Are we going to make crypto more efficient because we could short, or are we going to make these, volatile moves in crypto much greater because all of this crypto is going to be locked up in DeFi?
Right. Tough for me to really speculate on that. My thought is, again, with more supply locked up, and more leverage, my hunch tells me it will bring more volatility. I do think it will be like relative to what's happening in the market. And, in times where things are really, I think a lot of times if the market is somewhat quiet and there's not a lot of news coming, I actually think the fact that a lot of supply is locked up will just mean, it won't be as volatile, right? People won't really be as active, but then in up or down swings, they'll probably be a lot more vicious. So I would probably say the Ethereum community needs to brace itself for a lot more volatility.
Yeah, no, that makes a lot of sense. We can't wait till we have options and derivatives on this, right? So you guys recently raised $7 million. I think I read it on CoinDesk, I believe. And I think the article was kind of talked about how you're going head to head against Genesis and BlockFi. What do you think about that? I mean, Genesis is pretty big, right? And BlockFi is gaining a lot of momentum. Do you kind of welcome the competition here, or do you think you're pretty differentiated?
Yeah, I mean, I think we're somewhat differentiated. And again, the infrastructure that we're using is just a little bit different, right? And we want to be pushing the notion of using smart contracts to sort of cut costs, open up access. We do think we can provide lower rates if our hypothesis is correct, if that more people want to access this market and are able to access this market, rates will sort of go down. One thing that we are looking into is supporting Bitcoin natively, just because there is a lot of demand to conduct financial services in Bitcoin. So I think those platforms have a leg up there. But, I definitely think like the market is large, it's really only growing. And then I do think that there are structural components of Dharma Lever that make us better suited for some use cases.
Makes a lot of sense. So, I mean, the question that nobody wants to answer on my podcast, but I guess it doesn't matter too much for you guys because you're somewhat private. I mean, the $7 million you raised, do you think that that's enough to fund you guys for, say the next 2-3 years, or do you think burn rate's pretty high? I know there's not that much public about this.
Yeah, I think we should be. I think we're in a good spot. And again, if Dharma Lever does well, we plan to be generating revenue. So, we're confident in our ability to survive this crypto winter for however long it lasts.
Got it. And we'll see. We need some news. I feel like the bull market might be bubbling up, but I mean, I just saw Elon Musk on a podcast about Bitcoin, so I might be a little biased on my short-term view here.
Interesting. Did he have good things to say?
I didn't listen to the whole thing. I just saw the news, and I was like, I got to hop on a podcast with Max, but I kind of want to listen to this one. But
I don't blame you.
Yeah. So Max, I know you wanted to talk a little bit about some other projects in the space. What gets you excited in the space? I mean, is it Bitcoin, Decred? Like, what are the projects that you're personally excited about?
Yeah, you kind of hit it on nail on the head. The other projects I'm excited about are definitely Bitcoin and Decred, as well as Monero, obviously alongside the Ethereum ecosystem. I am a believer. I'm somewhat a believer in this notion of hard money. I don't really think that we'll see this like hyper Bitcoinization future, but I just think Bitcoin plays really well into what we're seeing, on a macro scale with kind of modern monetary theory. I think what we've created is just like a very, very complex, intertwined global economy that, similar to all the leverage we're adding in Ethereum, it's so convoluted. And I think once things start going the other way, I think the downstream effects will be pretty massive. I think populism will continue. Wealth inequality will continue. And, the central banks at this point are the lender or the buyer of last resort for all financial markets. And at a point, right, you either run out of liquidity, or if you want to create more liquidity, there's only one way for you to do that. And that's by printing more money. So I'm very bullish on Bitcoin. I'm very aligned with the ethos. And then interesting you bring up Decred. I know you're a big fan of the project. I'm a really big fan of the project. I just think while Decred has all those same benefits of sound money, I think Decred is very much like an experiment in how to organize open source software in communities. Iterative Capital has an awesome thesis on the fact that, right, these open networks are essentially just new forms of coordination, and they predate the history of kind of the cypherpunk culture and the open source movement. And to me, Decred is actually a very fascinating, both open source community and DAO that's really kind of like on the bleeding edge of how people will start to organize themselves around these networks. So, huge fan of the project. Love the team.
Yeah, no, that's interesting. And my disclosures on tokens are in the podcast notes. But the only other thing I'd say is one of the things that got me really interested in Decred was, when all these projects were running out of money, there was news of, the Bitmain and consensus layoffs and ETC and all that. And when I found Decred, it was like, we have a treasury. Part of every block reward goes to fund it, and token holders can decide how they want to spend that treasury, whether it be on research or marketing or DEXs or whatever. So that's something that I found that was really interesting on Decred.
Yeah, and it's interesting you bring that up just because right now, I mean, we're finally now starting to see the fact that cryptocurrency projects need sources of funding, right? You have Ethereum, in which the EF holds, a smaller amount of Ethereum or of Ether than like some ICO projects. And the founder of Grin even was saying, this is kind of ridiculous how we can't fund these development proposals. Maybe we should just give 20% of the block reward to our developers so they can fund the project, right? So again, this is like a tragedy of the commons type thing where building out the protocol is very much a public good, but there isn't an incentive necessarily to fund it because the benefits are spread out amongst so many people. It's not one individual reaping a lot of the reward. So we're seeing things like Moloch DAO being shipped to fund ETH 2.0. Grin, Poloniex is going to send some of their fees to the dev fund, right? But those are interesting solutions. But with Decred, right, it already works. It's similar to Zcash in the Zcash's founders reward, but that founders reward is really big, and that just goes off to pay investors, right? Versus Decred, you have 10% of the block reward, which just goes out to actually paying contractors who contribute. And it's a free market for contributors, right? Anyone can come in, they can say, hey, I want to work on this. If it's approved by the committee and eventually by just token holders, they can get paid to work on an open source project. They can do it from anywhere in the world at any moment in time. So to me, again, it's like, if we think about if the future of work will be more autonomous and you'll be able to kind of move around more, to me, Decred is very much like on the bleeding edge of showing how that's going to be a possibility.
I got to get you a job at Decred if something happens at Dharma, Max. That was a great overview.
We have a contingency plan.
Yeah, but one of the things that I mentally linked between Dharma and Decred was when I was researching Decred, I downloaded Decredition, their wallet, and it was just really easy to stake and to vote on proposals, whether it be protocol changes or how to use treasury to buy tickets. Like I thought the UX was really, really good. And then when I saw Lever on Dharma, I'm like, wow, this UX is really, really good too. This is going to attract a lot of attention. So I don't know why, but it's kind of obvious, but I just think crypto projects have to focus more on the UX. It's just such a critical piece here.
Yeah, I mean, there's definitely a subset of community members, who think usability is the bigger battle than scalability right now. Not to knock down scalability, we need that. But ETH 1.0 does work for some use cases, right? But the biggest barrier to entry is the fact that, interacting with these things is still relegated. You need to be either a programmer or like a crypto geek. We need to make these things accessible to the common public. And the way to do that is by creating beautiful interfaces that they're used to, right? You have to lower the cognitive load for them.
Got it. And, I hate to ask this question because it's somewhat loaded, but is there a point that you think that Dharma would decide to switch to another protocol if Ethereum wasn't able to scale? Or like you just said, do you think Ethereum 1.0 is all you need right now?
Yeah, that is going to be one of those things that comes down to, right, where the community is moving, where the assets are moving. If it's almost split 50-50, like who really knows, right? That's one of those things that's just going to be hard to decide. I would imagine that Dharma will stay where the users and where the assets are. So that's kind of the short story.
No, that makes a lot of sense. And Max, is there anything about Dharma that I forgot to ask you or that's interesting and you want to talk about? I know I definitely didn't hit on everything.
I think we covered a lot of it. I would say, if you're kind of listening, definitely, check out Dharma Lever. Sign up for the wait list. It is about to break Ether all-time highs. Reach out to us if you have like kind of any feedback, anything you'd like to get added, a feature you'd love to see. We really do like connecting with our community members. So yeah, I would just say, reach out to us on social, over email, and kind of, reach out to us, say hello. Let's chat about what we can do better.
Yeah, that's interesting. And reading into your comment, Max, I mean, ETH all-time highs is like, what, 1,400? So if you guys go over 1,400 users, it sounds like you'd be like one of the most used apps on a user basis. I mean, I prefer to look at metrics like, the total amount loaned out or total amount of leverage or money saved, like the valuable money metrics here. But I think that's an interesting data point on users. I mean, you guys are somewhat breaking records and you haven't even launched the mainnet yet.
Right. Well, so we are on mainnet, right? So all Dharma Protocol has been on mainnet since May 2018. So all of the funds that are being moved right now, all happening on mainnet, all on chain. Yeah, I would like to say breaking records is a good thing. I think the best form of marketing for us is if we could actually just break Ethereum for a little bit, same way CryptoKitties did.
We're gonna look back. Hopefully, if Ethereum can truly scale, we're gonna look back at the apps that broke Ethereum and hope that apps in the future could do the same.
Exactly. I think it's more of a badge of honor within the community.
Yeah, no, totally. Well, Max, it's been a pleasure having you on. I'm definitely going to schedule something with you to have you back on to talk about the project in a few months.
Awesome, Tom. Thanks so much for having me.
Thanks so much, Max.
Hey, everyone. Thanks for listening to the podcast. Please rate, review, and share the podcast to help other people find it.